Yeah, hello. Very warm welcome to all of you, wherever you might be joining us now live. It is 7:15 Central Time here in the United States. It is 8:10 Eastern Standard Time here in the United States, and it's 4:15 East African Time. Very delighted to have you all on our show today on KDRTV. And as we bring you on, we're so happy that today we're going to engage in yet another interesting conversation. But today we're going to go over to Kenya, where we're going to have a conversation with the World Bank officials or chief economist in Nairobi, Kenya, who are going to give us an update on what's happening in the country, particularly in respect to the COVID-19 pandemic that has not only grounded normal life here in the United States, but also around the world. So just before then, just making a quick announcement that as we engage with the diasporans and particularly those ones back at home on Sunday at 11:20 Central Time. Also in Kenyan time will be 7:20. We'll be talking to Professor PLO Lumumba. Patrick Lumumba will be here to engage Kenyan diasporans here in the United States and around the world on how best we can work together socially, economically, and geopolitically to develop two parts of the world, that's in Kenya and here in the United States. But before then, we want to engage the chief economist from the World Bank, who are based in Nairobi, and who are going to give us a quick update. So we are honored to bring on the show today three panelists who are going to give us insights into how the Kenyan economy is doing. That will be Alex Sianet, who is the chief economist in Nairobi, and you see him right there, very good-looking gentleman. At the center also is Peter Chacha, chief economist in Nairobi, who also help us really give a dissection of what's happening in the country, as also prepares to take the two gentlemen downtown for Nyama Choma, and also we'll have John Pepe, who will also be giving us a quick update, particularly based on evidence on what's happening in the country. So, gentlemen, it's good to have you on the show. But very first, I want to thank you very, very kindly for willing to come on the show to talk to KDL TV and talk to Kenyans in the diaspora. And I want to tell you, before even we get to the discussion, and I know I speak on behalf of tens of thousands of Kenyans here in the US and elsewhere around the world, that we all miss home. We love the country very much. And particularly during this very difficult time to you and to the people of Kenya, we want to make sure that we pass the message that you need to be safe. That's important because we want to make sure that in the next few years, we're able to meet and lead a good life. So that's very important for us to pass that message to the country. But particularly for the three of you, and on behalf of the others, by the way, I'm going to be a big shout out to the other observers who are standing by. Vera, which was a very excellent moderation last time. Thank you for the good job. Kasia Muthemba, who's also standing by, and Kathempa and Shafia Futado, who are also observers here. Thank you for the great job. And obviously, the team at One Voice Consortium, led by Dr. Robert Shiori, thank you for the great job. So, guys, obviously, welcome. If you don't mind, very quick introductions before we get to the niche details of your presentation. Alex first.
Well, thank you very much for the opportunity to discuss with you and your audience today. I'm Alex Sinat, Senior Economist with the World Bank based in the Nairobi office.
Okay, thank you very much. Peter?
Good morning, viewers. My name's Peter Chacha. I'm also Senior Economist based here in Nairobi with the World Bank.
Very nice to meet you, and thank you for talking to KDRTV, Peter. And lastly, Utz.
I'm a senior economist in Kenya covering poverty and equity, as well as having a global role coordinating the rapid response phone service globally.
Okay, thank you guys. Good. Again, as I said, nice to have you on the show. So I think pretty much is a presentation from your end. The Kenyans here in the United States and elsewhere around the world are very interested to see how the state of the economy is doing in Kenya. And I think, Alex, if you could take us the lead through what your findings are.
No, privileged to do so. So I don't know whether we'll be able to put the slides up from the get-go. Good. Okay. So in fact, in this case, we'll start. I'll hand over to Utz because we're going to start with the overview of what our recent survey evidence says about how firms and households have been affected so far. Utz.
Perfect. Thank you so much, Alex. So what I'm going to do in the first couple of slides, I'm just going to describe a little bit the evidence that we see in terms of the impacts of COVID-19 on Kenya. So if we go to the first slide, to the next slide, So here, we basically just provide a little bit of context and background to show what has happened over time in Kenya. And you can see on the upper graph the number of infections and how they increased over time. And as you can see, we had like the first wave in July, August, and now we've sort of started to go into a second wave. The other graph below is showing you the response from the government. As you know, the government in Kenya very swiftly implemented containment measures. For example, closures of bar and restaurants. There was a lockdown of Nairobi and some other counties. And so you can see this in the blue line in this graph, where it like rapidly goes up and then it was lifted over time a little bit. And you can also see that Kenya, in terms of containment measures, were very much aligned to other countries surrounding it, except for Tanzania, which I think we're also all aware of. In the next slide, we show you what are the major impacts in terms of poverty that we have estimated of COVID-19. So if you look back and sort of like historically a little bit to like 2005, you can see that poverty has constantly decreased over time, which is something that we of course lauded the government for, and it's also something we work towards. And so you can see then though in 2019 to 2020, with the impact of COVID-19, suddenly poverty increased quite a bit again. In other words, COVID-19 has wiped out the progress of poverty reduction in Kenya for the last 5 years. So it increased by 4 percentage points, which is equal to about 2 million individuals that, due to COVID, are now in poverty again. And so over the next couple of slides and the rest of the presentation, I'll explain a little bit how this came about. And so on this slide here, you can see that the economic activity in Kenya, like basically really went down with the advent of COVID, as well as the containment measures implemented by the government. On the left-hand side, we focused a little bit on the formal firms. And in the formal sector, you can see that 30% of firms had to close. Not all of them permanently, but in general, they still had to close. While even for the 70% that remained open, some of them only partially, you can see that there was a huge reduction in sales. So like 90% of them reported reduction in sales. But as you also know, the economy in Kenya, well, has the formal sector, but of course the informal sector is also extremely important. And so on the right-hand side, we looked at household enterprises, which are like a major fraction of the informal sector in Kenya. And so you can see a very similar picture in the informal sector. A lot of firms had to close. But you can also see the change in sales. So even if the household enterprise remained open, you can see that the sales dropped by like about a third to a half on average, which is, if you imagine this as you being the household, of course, a huge reduction of your income. And this, of course, going to have implications. And so on the next slide, we go exactly to this household side of like how did households basically started to like feel the shock of COVID-19. In the upper graph, we look at the unemployment rate, and you can see unemployment like really went up to like staggeringly high numbers. And that's of course very obvious because of firms and micro enterprises and household enterprises, if they see reduced sales or have to close, well, the first step is to fire workers. And the second step, of course, is also to like ask workers either to work less or to reduce their wages. And so this is exactly what we see. The unemployment rate goes up, but we also see that the wage earnings go actually down. And you can see that this is particularly stark in the service sector as well as in the informal sector, which is exactly something that we've predicted with when the crisis hit Kenya, because these are the sectors that are most affected. So on the next slide, we show how households dealt with this. Because if you like think back, well, as a household, you suddenly only have half of your earnings or like 2/3 of your earning. Some households basically had almost no earning at all anymore. So how do you react to bring yourself and your family through the crisis? And so on this graph on the left-hand side, we see that savings played a really important role. 40% of households actually relied on their savings. We also do know, though, that these households are not the most vulnerable households, because most vulnerable households do not necessarily have access to savings. And also something we don't show in this presentation, but we have tracked over time what happened, like how households relied on savings. And we can see that this number of households actually decreases, showing very clearly that the longer the crisis affects Kenya, the more these savings are basically depleted, so that household consumption reduced food consumption and sales of assets. And especially the reduced food consumption has really can have like really negative impacts. On the right-hand side, we show you some of these impacts. It basically means adults, but also a lot of children, go several days without eating all the meals that are usually served. And so this, of course, has and can have very big impacts on health of children. And we also do know that, especially in the first 5 years of childhood, but also later on, nutrition is really important to ensure that children can actually tap into learning potentials. And if they are not properly nutritioned, this can have like lifelong impacts on the ability of pursuing opportunities. And so this is why we are really flagging this as like one of the really negative impacts that that one needs to mitigate. Sales of assets is also a negative coping strategy, as we call it, because if you sell your assets, you might not be able, after the crisis, to basically return to the position in the economy where you've been, because, well, you don't have the assets anymore to basically do the work that you have done. And so this is also something that is good to mitigate, to ensure that the ones who are falling into poverty at the moment only stay there in a temporary way and not permanently in poverty. So on the next slide, we go to the next really important topic, which is human capital. And I already touched on this a little bit while talking about the malnutrition of children. But also, of course, learning itself is extremely important. And as we all know, like in Kenya, the schools were closed. And so children could not go to school anymore. This also, by the way, had some impacts on the ability of children to who often benefit from free school feeding programs. But now here we focus much more on the learning impacts directly. And in the lower graph, you can see that children actually still continue to engage in learning activities, at least a big fraction of them. However, these learning activities are by far not as effective as like going to school. So you can see children, they continue to read textbooks, they continue to do self-prepared materials, but they didn't really interact with the teacher. And this is the crucial point, which is shown in the upper graph, that only slightly above 20% of urban children had access to a teacher, which is really important to make learning effective, while in rural areas, way less than 10% had access to a teacher. And so this is very worrisome. It's worrisome for two reasons. The first one is that overall, children are depleted of learning opportunities. And this, again, can have impacts which are really long-term, also affecting, of course, their earning potentials in later years. But the other second crucial point is that you can see this divide between urban and rural. And we know from surveys that we have done before that rural areas generally have lower educational attainment. And now we can see that rural areas, children have less access to schools than urban children. And so this basically exacerbates this inequality of learning between urban and rural. And therefore, it's also very critical to have an eye on this and to try to mitigate that. So on the next slide, we are drawing, I'll be looking at the government perceptions. So we also asked respondents from these phone surveys how they felt that the government is dealing with the crisis. And you can see that the overall picture is actually quite positive. Like a large part of the population is trusting the government that it managed the COVID crisis well. However, on the last question, you can see that households are to some extent worried that the government might not have sufficient resources to really be able to like assist all the households and families that are in need. And that's, of course, something Alex will come back to in the next presentation later, by showing that indeed the fiscal space of the government is constricted. So on the next slide, we are looking at we're drawing the conclusions from the analysis that I've just shown. And so we, again, like divided them into two different parts, on the one side to firms and on the other side to households. And of course, like these overall policy recommendations are also going hand in hand with the ones that Alex will show in a second. So on the firm side, we feel it's really important to ensure that viable firms remain liquid so that they do not have to permanently close in the crisis, even though before the crisis they were viable and were surviving. And so we feel that this is quite an important point to make sure that the economy can recover swiftly once the crisis is over. Also, we see that firms that actually used digital capabilities in the crisis were the ones which had less reduction of sales and were actually generally faring better in the crisis. And so, therefore, we recommend that generally firms should try to enhance their digital capabilities so that they can tap into those and survive the crisis better. Now, on the household side, first, we do flag, and I've mentioned this a couple of times in the presentation already, that it's really important to ensure access to education and health services. But in addition to this, I mean, I've shown you how the savings get depleted, how a lot of households don't have savings but reduce food consumption. So we feel it is like really important to ensure that households can sustain their livelihoods, can sustain the nutrition of their children. And this can be done, for example, by cash transfer programs. And that's my the next slide, where we show that you can actually do cash transfers in quite effective ways. But one needs to put a little bit of thought into it. So if you would take in Kenya 50 billion as a budget for a cash transfer, and 50 billion sounds like a lot, but well, it's as much as the reduction of the VAT at the beginning of the crisis has cost the government. And so this is something that generally could be like a feasible amount. So if you would take this money and then you would make a universal transfer to everybody in Kenya, well, you would reach everybody, but you would also reach the non-poor. And in this case, you would manage to reduce poverty, but only by 2 percentage points. And that you can see in this slightly pink colored bar. However, if you would instead take this money and target it in a smart way, this means, for example, you look at the different locations where COVID-19 as well as poverty is highest, and then target those areas rather than everybody in Kenya. And we do have the analytical tools to produce such a map, as you can see on the right-hand side. In this case, the same amount of money would actually be able to like reduce poverty by 5 percentage points. This means you would not only mitigate the impact of COVID-19, but you would actually reduce the number of poor even further than that. Would be like about 2.5 million people that you would bring out of poverty. And so that's something we feel is really important to consider. We also think that such a tool needs to embed it within the already existing framework and concepts and toolbox of social protection in Kenya. So because Kenya does have the appropriate institutions for this, and this should be embedded in those. I'm not sure we have a next slide because we did have two different versions. If there's a next slide, we can go to it. Otherwise, I'll finish this presentation here and hand it back over to Alex. Thank you.
Thank you, Utz. Yes, I'm afraid we cut you by one slide, so sorry for that. But let me start on the part of the report that I will quickly describe, which is really to follow on from Utz's overview by zooming out, if you like, in a sense. I mean, thanks to the work of Utz and team, we have a lot of detailed information, as you saw there, on how many firms and households in the economy have been affected. What I want to do is zoom out, as I say, and just briefly give you a sense of what do we see in terms of the macroeconomic data for how the economy as a whole is faring, implications for the outlook, and then very brief ideas and recommendations regarding appropriate policy responses. So if we go to the first slide, the important recent data that we've had tells us that the economy went into quite a deep contraction in the last quarter for which we have data, which was the second quarter. So COVID, came into the country in March, the end of the first quarter, but it was really moving into the second quarter when all the restrictions had to come into place, and the international disruption was also felt, that we saw the big economic effects. So you can just see in this quarterly data of how much the economy was growing quarter on quarter in terms of real output, that this was a deep dive, a 5.7% contraction year on year. Where did that pressure come from? Well, the turquoise there is the agriculture sector, and you can see that actually that continued to fare quite well. But the really big pressure came from what we call the tertiary sector, which is basically services, everything from banking to healthcare to accommodation, ICT. But interestingly, if we look in a bit more detail at that services sector on the next slide, so this breaks down the services sector into its major components. We see that, in fact, the biggest fall came from education. And this is quite important. This results from the National Statistics Agency, from KNBS's best effort to understand, look, schools and education institutions were physically closed. Students, as Utz also discussed, were learning from home. What did this mean in terms of the outputs, the learning outcomes that the education sector was able to produce? And their estimate is that there was a huge decline after the closure of institutions, almost a 60% fall in the amount of output, in a sense, that was going on. And you can see, even compared to the impact of other hard-hit sectors, like accommodation and food, basically tourism, transport, as you might expect, trading activity in terms of retail, education really accounted for a big part of the steep fall that we saw. And keep that in the back of your mind, because this will be important for our forward-looking story as well. If we go to the next slide, I just wanted to provide a very quick corroboration of these kinds of significant declines in activity and pressure that the economy has experienced. We've all become more familiar with this kind of data. This is activity tracking data that Google is able to collect. And we can see that if we look across activity in various places, essentially, like retail establishments, transit stations, parks, workplaces, grocery and pharmacy, the story is pretty similar. We see a steep drop as the crisis begins to take effect throughout sort of late March and into April. That seems to trough in May and maybe early June. And then we see, a fairly steady trend recovery back towards normal levels. Now, it must be said that, this data only goes through the beginning of November. As you also heard from Lutz, and as you'll be aware, of course, we have seen a renewed pressure in terms of increasing cases and so on. So it remains to be seen how much sort of traction we continue to get. But as we look in the sort of rearview mirror of the data, I think what we're seeing is, sharp negative effects in the second quarter, and actually some encouraging signs that by the time we got into the third quarter of the year, there was actually a reasonably strong and quick recovery underway, hopefully moving into the final months of the year where we are now. But we don't have a lot of data on that yet, because unfortunately the economic data is always a little bit lagged. If we go to the next slide, some more corroborating evidence in terms of electricity sales and what we see in terms of what purchasing managers are saying that bears out the same story. Next slide, please. Just to touch on some other things that are always of key concern in terms of economic performance. Inflation. This hasn't been a year where inflation dynamics have been all that important, in the sense that we've seen fairly consistent disinflation, so actually a reducing pace at which prices are increasing. So that where we stand now is, roughly, we've seen a little bit of a pickup again in November, but where we stand is roughly at the midpoint, around 5%, a little bit higher now of what the central bank looks at for its inflation targeting. And that's consistent with, the economy being under this pressure, and as a result, less activity and less upward pressure on prices than what we usually see. Somewhat similarly, if we think about Kenya's need, how it generates foreign exchange, and also its need for external financing, the current account gives us an important sort of perspective on this. Kenya runs a structural current account deficit, but in fact, this year we've seen the financing need that comes from the balance on Kenya's current account reduce. And this is because even it's maybe a little bit counterintuitive, but even though exports have come under pressure as the international economy slowed down a lot, we saw what happened with flour exports to Europe, for example. Tourism has taken a big hit. There's been an even bigger effect from the reduced import bill because global energy prices have come off so much. and because there's been a slowing also in investment activity and consumption in the domestic economy that sucks in imports. So concerns around the current account have also been allayed. Another very helpful factor there that's of interest perhaps to our audience today is that there was a lot of concern that the crisis would really undercut remittances. And international remittances coming into Kenya are a very important source of additional income to households, but also from an overall economic perspective, they're an important source of foreign currency, of dollars and euros and what have you. Somewhat contrary to expectations, remittances have held up very well, despite all the pressure that economies internationally have been under. So you can see in terms of levels that the inward remittances into the country on a month-by-month basis have stayed, really basically elevated. And that's been a helpful factor, both in terms of supporting households and their incomes and the economy as a whole. The Kenya shilling has depreciated over the course of the year so far, but it has not done so in a way that is at all out of line, really, with the currencies of many or most developing countries, certainly in the region. So that chart on the left shows the relative performance compared to other currencies that do move against the dollar in Africa and Middle East and North Africa, and you can see that the change in the shilling is very moderate in relative terms. Exchange reserves got a significant top-up as international institutions and development partners contributed to bring in funding to help to combat the effects of COVID in the first half of the year, and that has been a helpful factor in maintaining those levels. If we go to the next slide, please. What does this mean in terms of our outlook? This slide shows quite a lot of information, so bear with me. But what we're basically showing here is that before COVID, we had an economic outlook for fairly stable economic performance in terms of the overall growth of the economy, close to 6%, 5.5%, 6% type growth. COVID came along, and in our previous report, which was published in the sort of early stage of the crisis in April, we were forecasting that growth would reduce significantly to 1.5% for 2020. That's the turquoise line that you can see there. The gray line, with unfortunately the bigger dip in 2020, is our updated estimate as of this report that we're discussing today, where we see a small contraction of 1% of GDP for the economy as a whole, and then a rebound next year to 6.9%. This is where I want to mention the education factor again. It's an unusually strong rebound that we're factoring in to our projections. That is a rebound that is turbocharged, if you like, by the effect that the normalization of the education sector is going to have in the national accounts. So it's a bit of a technical factor, but just as there is a big drag on what we see in terms of the official statistics on economic output this year from education institutions being closed, so on the flip side, when that normalizes, there will be a big positive effect on growth. The reason I'm emphasizing this so much is because it's completely unprecedented that we see sectors of the economy essentially shutting down like this. And so it creates a big challenge for the statistics agencies in Kenya as well as internationally. What is the best way to take this into account? And so we think there's a good probability that there will continue to be refinements, new data, changes in methodology that will potentially really affect how the statistics agency sees this playing out. And so, economic forecasts are always, subject to uncertainty. We're often not as right as we would like to be, but this really is a period where that uncertainty is unusually elevated, both because, we don't know, of course, how the pandemic is going to continue to play out in Kenya and internationally, and we also have a lot of these technical factors that are going to push the numbers around. But that is our base case as we see it now. Very significant slowdown for 2020. I think we all expect that. And then a significant rebound into 2021. The key challenge that we see for the economy moving forward has to do with the fiscal situation. Kenya came into this crisis already with quite stretched public finances and a growing public debt burden. The government had very ambitious plans to drive down that fiscal imbalance and begin to reduce the debt burden again. Of course, COVID means, because of the weakening in the economy, that means less tax revenue for the government, and government has also taken a lot of steps, some of which it's talked about, to try and cushion the impact on vulnerable households and also on firms. You don't want to lose productivity in the economy if you can help it, and these are costly things. And so, of course, that fiscal consolidation agenda has had to be paused as a result of the crisis. And so, in the current fiscal year, which is those last group of bars, we still see a very significant fiscal deficit on the order of 8%. These are the government's figures, and that results, of course, from a big shortfall in revenues compared to the expenditures that are going on. If we go to the next slide, you can see the impact on the debt burden, where as a result, even before the crisis of big fiscal imbalances, we have been seeing an increase in debt. And it's not shown on this chart, but we expect that to continue for at least the next year ahead before the consolidation can hopefully get back on track. Next slide, please. This is a really important factor to consider because Kenya is at the stage where the scale of government's financing requirements are significant relative to the economy as a whole. And so it would be helpful from a sustainable growth perspective to be able to scale back that requirement, which would enable more of the stock of investment funds in the country to flow essentially to the private sector. So this chart compares private sector and government growth of credit to the private sector versus to the government. And you can see that government has really taken up a lot of increased demand for credit. This is an important point because very often when we talk about a fiscal consolidation, that's associated with reducing growth and with a kind of austerity scenario. We don't think that needs to be the case for fiscal consolidation in Kenya, precisely because there is such scope to open up more space, more credit availability, more opportunities for private sector activity if the government can scale back that need for financing in the economy. Next, and I believe last slide, as a bit dense, apologies for that on the screen, but it's just to draw viewers' attention to the discussion we do have around policy ideas and recommendations in the report. We go into a fair amount of detail there, so I'd really encourage interested viewers to take a look at that. We can't do justice to it in the time that we have to present. But we think there are a range of things that government can do, both in terms of tackling this fiscal agenda that I've spent some time describing, but also, doing things in terms of maintaining the momentum that has been developed around the reform agenda and continuing with some of those, what you might call medium-term sort of deep reforms to play a role to help the economy rebound from COVID, as well as possible, but also in a sustained way, and get to a really strong growth trajectory. So, just some examples. There are many things, but in the fiscal setting, there's a huge opportunity to streamline the very large portfolio of public investment projects that the government has, prioritize the ones that are really going to be impactful, free up funds from the ones that are going more slowly, and to drive development through capital spending in that sense. And in terms of the structural reforms, things like the Big Four agenda around universal health coverage. I mean, COVID makes it very, very starkly apparent the importance of the sector and the kinds of gains and improvements to quality of life and ultimately, also the overall performance of the economy from continuing to take those kinds of steps. So thank you very much for your attention. I hope that wasn't a death by PowerPoint, and looking forward to the discussion.
I think, and then I think that will bring in Peter. Peter, I want to bring you in, and there might be a couple of questions, but I bring you in so that you can give your take as well. I think the key question, and I think we're targeting the diaspora community. There are a lot of Kenyans here in the U.S. who are just waking up. By the way, others are still sleeping. So understand, we're really very curious on what's happening. Perhaps the first question for you, as you give your take, Peter, could be, in your view as the World Bank, what do you see as the role of the Kenyan diaspora community in really helping the country move forward, particularly during this difficult time?
Sure. Thank you, Jeremiah, and the opportunity for the KDR viewers to be able to engage and so that we can have a conversation. I think you ask a very pertinent question. Yes, as you saw in the presentation, the flow of international remittances to Kenya, it dipped slightly in April, and then subsequently it rebounded strongly, and that has been very, very crucial in supporting the current account deficit. And so Kenya has been able to use, the resources that Kenya, the Kenyans in the diaspora do send back at home to be able to meet its international obligations. I think one point I will add is that finding a good vehicle to be able to better tap those resources would provide a good opportunity for the use of these resources, and probably encourage more to be sent back at home. But just to add on the presentation that Alex has and Utz have eloquently put forward, I will add that the economy was very resilient before the outbreak of COVID. We had a strong growth that was near between 5.8 to 6. We had very stable macro environment with a very low inflation, and all that has been kind of washed away by the outbreak of COVID. And you saw that from Ut's presentation that there is an additional 2 million Kenyans whom we call new poors. And what's very stark is that this is a completely different group of because they are mostly resident in the urban areas. Previously most of the poor were predominantly in the rural area, but now we have a new profile of poor in the urban who actually the government doesn't have a way to target them and to support them. So this is kind of an emerging challenge that the government has to grapple with to be able to expand the number of measures that they have to be able to intervene to support the poor. I think that's all I will add. But of course, the diaspora have a big responsibility to be able to contribute, continue to send home resources that will help to support the balance of payment, and also keep investment revived, because at the moment, of course, like elsewhere in the country, the investment sentiments are quite low. So I think as we go towards the recovery phase, it will be important for the diaspora to also, take appropriate decisions to start off an investment that was delayed because of COVID. I should just add, I think from the Kenyan perspective, there is other positive that I think I could add. I think the political environment has been somewhat very stable. That's something that we can credit in the current administration, to say that we don't have a lot of politicking that used to take a lot of Kenyans' attention, and in a way add a lot of uncertainty. That has been addressed in somewhat with under the handshake, which I'm sure you're all aware of. So that's a good development. Another positive development that I should add is that this year we received sufficient rains. You won't believe it, but rains are super important in the Kenyan economy, because when it rains, agriculture does flourish, and since agriculture is still like account for about 30 to 34% of GDP. So whenever it's doing well, you can be assured that that's a good thing. So we received sufficient rains this year. So I wanted to add those positives, and also to say that from Ut's presentation, you saw that Kenyans are positive with the response that the government put in place. So those combined with the gradual reopening, we are seeing somewhat recovery in the second half of 2020, and as we head towards 2021. Over to you, Jeremiah. Thank you.
Oh, very good. A couple of quick questions for you guys, and I think particularly with the diasporans, and I do engage in a lot of conversations. One of the most contagious discussion really is about remittances, and I want to read a question here, following up on you, Alex, and also, if you don't mind, you can add on to what Peter said. And here's the question from diasporans. They're asking, diaspora remittances are today considered among the greatest foreign exchange earners, to your point, for the country, but how is it evaluated when there is really no formal structure and channels for executing this? Yes, the point, and I know particularly diasporans, especially in North America, send a lot of money to the country. I don't know, it might have add up to about 6.7 to the GDP. But the question is then, is there a structure in which you guys, the money is monitored, and how is that evaluated?
Excellent question. I'll maybe take it from the sort of macroeconomic aspect and then invite Utz in terms of the kinds of data that he monitors. Look, I mean, in terms of the bookkeeping aspect, you can imagine the central bank keeps a very, very close eye on understanding, what are the flows of money coming in and out, and what's happening in the foreign exchange market. And given the importance of, remittances, I think there's very good sort of solid tracking, using required inputs from the commercial banks and the other channels of retail foreign exchange to be able to collate that data and get the big picture. So we get a high frequency, monthly data broken down by where is the money coming from in terms of the different countries of origin that enable us to I think have an accurate sense of the extent to which remittances are changing over time, and how they're contributing to the overall balance of in the currency market. Where it goes from there, in terms of flowing into the actual pockets of households and influencing the economy, that is more Utz's wheelhouse, and in some ways it's the more interesting one. So over to you, Utz.
See that remittances do play quite an important role for households. What we also though see, and especially in the crisis, is that there have been a lot about ups and downs in terms of like the receipt of remittances, and also like which households received remittances and which ones did not. And so while remittances are extremely important and can definitely help to cushion households against such a shock, they are in no way a substitute for like a proper social protection, social safety net program, which has the advantage of, first, being much more certain, it's predictable of what's going to happen. And second, it really is targeted based on the needs. While remittances, obviously and understandably, are targeted basically based on family ties, which is not necessarily targeting the most vulnerable households. So therefore, in conclusion, yes, remittances are extremely important, but they need to be complemented by like a proper and formal social safety net program.
I know, Peter, you did mention something to do with government, and I understand sometimes when you talk politics, politics is emotive, and obviously you have to spin that in the best way possible. But historically, would you also understand that there was the structural adjustment programs for African countries, Kenya not excluded? Do you really feel comfortable as is at the moment, do you really feel comfortable that the government has really created a good political climate for the economy to thrive, not short term but long term?
Yeah, so on politics, I would say my comments were based on what we're observing.
Mhm.
Basically, because Kenya is quite politically charged, and it, we actually get into that mode very quickly. What I was alluding to is that at least now there's been like uh, an agreement between both government and the opposition, which creates an environment where there is some bit of stability, which tend to give investors some certainty that there is some agreement in terms of policies and so on. But you mentioned about structural reforms that were implemented in the past. I think the bank has evolved quite a bit since that era of the 1980s. Now we've gone to a phase where we engage very closely with the government. We understand what their development goals are. So, for example, by looking at their medium-term development plans, and from that we see areas to engage to be able to support them, and then the bank's programs are organized around those main themes. So to give you an example of it, I think we have programs looking at say supporting universal health coverage. As you may be aware, Kenya is this current administration has been pursuing the Big Four agenda, which aims to have or establish a universal health coverage for all Kenyans by at least 2022. Um, there is also a second one that is on affordable housing that aims to build low-cost housing of about 500,000 low-cost housing by 2022. And then the third one is on food, nutritional security. And then the last one is to raise the share of manufacturing contribution to the economy. So the banks has also reorganized their program and support to the government to align to these broad themes. So this is basically how this has evolved, drawing from the lessons of the structural adjustment programs. Over.
Vision 2030, because I was expecting that in 2030 Kenya should be an industrial country, but that will be for later. So Alex and Utsa, I saw in the chat, just maybe in simpler terms for particularly our viewers here who are not very conversant with the economic terms, you just gave a take for what's happening in the capital. That's a governmental view of that. That's the state of the country as is, but also understand that Kenya is also a decentralized system of government. From your end, which part of the country is doing better than the other? And if you can share, why do you think other parts of the country are not doing as better as others?
Oh, very, very interesting and good question. A lot of the data that we look at is aggregated to the national level. So we don't pay as much attention as perhaps we sometimes should to some of these disparities in how different parts of the country are feeding things and how things are going. An important aspect of this, I think, is kind of the point that Peter made, that we have had this beneficial effect in 2020 of the recovery in agriculture from the more difficult conditions in much of that sector in 2019 due to drought, and essentially, to exceptionally good rains during the key periods this year. And so I think in many parts of the country, and for the livelihoods of really a high proportion of Kenyans, this has been extremely helpful, COVID notwithstanding. And we have seen that this is not your usual crisis in the sense that things like the services sector, things like small businesses and informal businesses, traders, sole proprietors, people hustling, as I believe we call it, in Nairobi, in the big urban centers and elsewhere, have been really hit hard, right, by people staying at home and by the fears about COVID and by the measures that government has had to take. So I think, a lot of the pain points have been in the big cities in Nairobi and Mombasa and the biggest cities elsewhere. And you've seen the responses in terms of people reacting and, in some cases, heading back to stay safe and have food. I don't know if Utz would like to weigh in on this, but also Peter, he's the expert in our team on, we do actually have some data at the county level, and Peter looks after that.
It is a very good question. And of course, Kenya is like one country, but different areas come from very different historical backgrounds and also have very different kinds of livelihoods that people sustain themselves with. And that's something we very actively look at from the household level. And so we, for example, do have poverty maps that draw the country very similar to what I've shown in the last slide, where we see the poverty more concentrated. And so it's a very good question. And in fact, what we do know is that, for example, the so-called needy counties and Northeastern Development Initiative counties, which are in the north and northeastern part of the country, they are really look very different in terms of like access to health, in terms of like education attainment than the rest of the country. And a trend that we've seen from 2005 to 2015 really was showing us that these parts of the country that have been appearing to like being lagging behind were not able to close the gap, but rather the gap remains. And so that's something I think we need to continue to flag and to make sure that programs are really targeted not only to the right households, but also to the right areas in general. And I think the devolution agenda in Kenya definitely can play a very positive role in this. The second point I wanted to make, and that's echoing what Alex had mentioned, we also do see that within urban areas, we've got big discrepancies in terms of livelihoods, in terms of access to services, and so on. And these are, of course, between the informal settlements and people who live outside the informal settlements. So in informal settlements, we see that people actually do pay quite high rent. They actually do pay high food prices relative to if you go to like a rural area. But at the same time, they are not able to tap into the usual opportunities that a city gives, like, for example, accessing good jobs in short distance or accessing better services in terms of health, in terms of education. And so that's something that we also feel really needs to have really need to have a focus on to make sure that people living in informal settlements really can tap into the opportunities that a city usually provides.
Good. You want to weigh in, Peter? At the same time, also, I think in your discussion, you did mention how other countries are doing. I think the show is not just for Kenyans. They're friends of Kenya. Like I've always said on this show, there's one Kenyan ambassador in Washington who's doing a good job. But here in the U.S., there are also more than 200,000 Kenyan ambassadors who are representing the country in the very best way possible. And then we do all have friends of Kenya who are interested, not just investing in Africa, but hopefully invest in Kenya. From your take, Alex, Peter, and Utse, how is Kenya comparing with other countries, particularly those ones in the region? I know you did mention Tanzania is almost COVID-free, Uganda and other countries in the region. Comparatively, how are we doing?
Thank you. Why don't you weigh in first?
Peter, you want to take that first or whatever?
In terms of like the poverty and how it compares to other countries in the region. And again, that's like a really interesting question. We see actually that in Kenya, the poverty levels are usually like in a good shape if you sort of like compare to the state of the country itself. Also, if you look at the poverty rates compared to sort of like peer countries. What you observe, however, is that even though in the sort of like the last decade or more, Kenya had like good growth, and I think Peter or Alex is going to say a little bit more about this in a second, but this growth did not trickle through into poverty reduction as much as we see in other countries. So in other words, like 1 percentage point of growth in another country translates into higher poverty reduction than it does in Kenya. And that's worrisome because this means that poverty reduction is not as much driven by growth. And this, of course, in the end, has to do with what kind of policies are in place, what kind of growth we are looking at, what kind of jobs are created by economic growth. And I think this is something we really should also like zero in and make sure that in the future, Kenya really has the kind of growth that it needs to reduce poverty, even in like stronger than before.
Peter, you want to weigh in as well?
Come in just to add that I think counties is an excellent idea, and I think the idea of devolution has been very popular and well received. What I've seen, I mean, with our engagement with the counties, there is still a lot of teething problems, especially on being able to enhance service delivery, because we know there are some services which have been fully devolved. For example, health. Health services has been fully devolved. Agriculture is fully devolved. Water, and the like. However, they still face challenges on resources. There's a little bit of delay in terms of getting resources from the center, and at the same time, the resource mobilization at the local level is still much weaker. So our engagement mostly with the counties has been around enhancing on-source revenue mobilization, so that they can be able to mobilize resources enough to be able to complement what they get from the center. But at the same time, the National Treasury also, we have engaged to ensure that there is at least sufficient address of the problems of delayed transfers to the counties, which sometimes leads to pending bills and cause a lot of challenges, because then counties are not able to honor their payment obligations. So those are only some of the problems that are still what I can call teething problems due to lack of enough revenue. And I know that the government has been working around to address that. But I would say the devolution agenda is a big development and has generated a lot of activities at the county level. Because for you who are aware of Kenya, you know that we only knew that Nairobi was the only hub of activities. But now, with the devolution, most of all these other counties are beginning to pick up in terms of the economic activities, which is very helpful to create jobs along the value chain and have investments start to start off at the county level as well. I think that's a great development in the past 7 years that we've witnessed.
Okay. Sounds good. I think we're just 3 minutes less the hour. The promise was to get done in an hour. So just to finish up, and I obviously appreciate your wonderful presentation here. Just in closing, because the target audience here is the Kenyans in the diaspora here in the United States and elsewhere around the world. And as Kenyans wake up to watch this, what's your closing message, Alex, to Kenyans in the diaspora?
Well, I don't know if I have an overall cogent message, but thank you very much for engaging with us on the recent work that we've done to understand what's been happening in the economy and onwards. I mean, this has been, such a global crisis. I actually think that Kenya, certainly in comparison, to many other countries in Africa, can be credited with the speed, with which government did respond, and some of the resilience that the economy is showing in terms of being able to hopefully come through this and recover well. But of course, there are many challenges and a big agenda. Please keep the remittances coming because that is very helpful. And then we at the World Bank are engaging as much as we can to support what's going to be a lot of work and understanding what have the lessons of all of this been. And I think one of them is, this issue of managing your fiscal such that, when these unexpected but inevitable shocks do happen, you have as much room for maneuver, as much fiscal space as possible to respond, is important. So that's very much on our minds. Thank you.
If you don't mind, what's your message to Kenyans in the diaspora and friends of Kenya?
I didn't hear the beginning. Was it to Peter or to me?
To you. It's to you.
To me. Yeah, I think it is a really important question. And I think what is on my mind is to make sure, obviously, this is a big crisis. Everybody is affected. And I think everybody needs to make sure that we support each other. And one part of this, though, is also to understand who are the ones who really need help. And I think for this, we should look at data, and we should use data to provide evidence so that decision makers, but also ourselves, get like a good idea about what's happening and what should be done. And in this context, I do want to flag, especially for the diaspora, have a look at www.kenyacovidtracker.org/RRPS for Rapid Response Phone Survey, because there you can see a dashboard that provides weekly updated numbers on a lot of different socioeconomic indicators, and you can basically get a much better idea about what's the impact of the crisis at the moment on the ground. And that's, of course, some of the data that we have used in this report. So with that, thank you so much, Jeremiah, for having us. And I look forward to a longer discussion later.
Good. And then obviously closing, I left that for a reason. Peter, some task here. You have some duty to do after this. Peter, closing statement to Kenyans and friends of Kenya in the diaspora.
Sure. Thank you so much, Jeremiah, for the opportunity. And to the Kenyans in the diaspora, I will say please stay engaged with the development in the policy space in Kenya. For example, in the recent past, there is the government has put forward the economic recovery strategy post-COVID. Find a way to be able to infuse some ideas to that strategy, and stay connected to Kenya, because we are all family. Over. Thank you.
Thank you very kindly to the three of you. Thank you for staying late to talk to us. And it's early here, obviously, in the US, but I want to tell you that we are so thankful for even wanting really to come on the show, not to talk to KDRTV, but to talk to the entire Kenyan diasporans. Really, we appreciate all that you're doing, and we hope that this is the beginning of many more conversations to come. So particularly, I want to thank you, Alex. Thank you. Great job. Good presentation. I did watch the presentation the other day as well. Thank you for all you're doing in Kenya. I want to thank you again, Peter. Thank you for the great presentation and all you're doing for the country and our people. Which also, I want to thank you so much for coming in. And I think the way you presented that in that using economic language was spot on. Thank you. I'm a business professor, so some understand that, but great work. And I know on the other side, there are also your colleagues. I can't mention all of them, but obviously I want to thank the team effort that you guys are doing. Vera, thank you for the good job. Your moderation the other day was excellent. I want to thank also, I think, PS Julius Muhia, I think is working closely with you guys. So I think it's good to give a big shout out to him as well. Alan Dennis, I want to also thank him on behalf of KDRTV and One Voice Consortium. I want to also thank Keith Henson, I understand is the new country director in Kenya. Please pass the message to him. All diasporans here are watching him. Our hopes are right on his death. So we are hoping that at least you give good advice to government and all other sectors of the economy. Kesia Muthemba as well, many thanks from us here. And Kathimpa standing by as well, and Shafia Futado, we want to thank you very, very much. We also can't leave the show by not thanking the Kenyan Embassy in Washington, D.C. Thank you, David Gasheru, Deputy Chief of Mission, for really making this possible for us to have this discussion, and hopefully the beginning of many more to come. Also, many thanks to our very able chair of the One Voice Consortium, Dr. Robert Shiuri, who is standing by. Very humble man, I think, is the one person who's really put all the Kenyans here in the diaspora together. And I think the message we are passing to Kenyans at home that for the first time, I think there's a serious commitment from our end that we need to speak in one voice, not just for the good of us here in the diaspora, but make sure that we contribute to the social, economic, and geopolitical being of the country back home. I think that's a message that we are passing here. I also can't really end by not thanking the executive director here, Ben Kebuato, who is standing by working on these things, and our executive producer is a young guy, by the way. Collins is just 17 years old. So if you see this screen back and forth, the guy is just 17 years old. So I want to thank him. He's just 17. This is the genius of the blood of Kenya, and that's the promise that we have, and made a promise to represent the country in the very best way possible. So I think that's good from us. And I think on Sunday, Ben, if you can have that on the screen, on Sunday for our viewers on this show, Professor Patrick PLO Lumumba, as popularly known as PLO, will be on the show here, engaging African diasporans for economic, social, and political development for the country. So we hope you join us on Sunday when we engage in that conversation with Professor PLO Lumumba. And then next week on Sunday, we don't have that on screen, but we'll be having a former African Union ambassador to the United States, Excellency Ambassador Ericana Chiombole Kwao. She'll be here on the show next week so that we can really continue this conversation. I think the gentleman from the World Bank, that's an excellent way to start these conversations to come. Not just talking, but hopefully we can really transform into more action in the future. So from us here on KDRTV, thank you very much. Hope to see you again here on Sunday.